Just talking briefly about reverse remittances phenomena. Just like a couple of weeks, there was an article in the New York Times. I don't know if some of you took a look at it, but I thought it was very interesting. Well, what we're seeing now is that we have these immigrants, right? That they're here in the United States. They used to support their families back home. Well, now they're here in the United States and they're unemployed, right? So you're unemployed here, so what do? Well, now you need to ask your relatives back home to try to help you. So therefore, we have seen actually reverse remittances, and in some, actually there is some data showing that in some cities in Mexico, the net transfer is also is negative, right? So more money going out than coming in, which is a new phenomenon. We haven't seen that before, right? So therefore, that's an interesting situation of what we're seeing with the financial crisis. Okay, so here what I want to focus on, right, is just talking about, well, we see how the crisis looks like for Latin American countries. So now I want to talk about what is the current state and what was the policy response, right? And when we look at how the Latin American countries respond to the financial crisis, we can say that they have responded in a very similar way than what we see that developed countries have done, right? So we have seen that they have responded in a similar way, but there are some differences, right? Again, the first difference is that the crisis didn't originate there, right? So therefore, they have different policy approach, right? They are more being affected for something external, right? Now it's not internal, so they are taking a different approach. Then something important to note is that Latin American countries have gone through important reforms during the 1990s. So therefore, now they're in a different position to face the crisis, right? And I'll touch on that more when I talk about the lessons. But Latin American countries have very significant reforms in the 1990s that have put them in a different position. So now when they're responding to the crisis, they are actually in a better shape than they would have been before. Well, we have seen that just like the United States, most of Latin American countries have used an expansionary fiscal policy. They have used fiscal stimulus. They have increased government spending to try to address for the crisis. Again, because of the reforms they implemented in the 1990s, where these reforms forced governments to be more fiscally responsible, now they have more room to maneuver and to implement these fiscal stimulus. Before, in previous crises, some Latin American countries did not have the luxury to do that. They actually had to decrease government spending during a recession, right? So we see that they're in a different position today. Then another important policy measure that they also use, which is what we have seen in the United States, is that we have seen a significant decrease in interest rates. So they have used an expansionary monetary policy. And we see, right, this decrease on interest rates. For example, in the case of Mexico, we saw that in January of 2009, they decreased their benchmark interest rate by half point and to 7.75 points. And that was actually the first cut on the interest rate since 2006, right? So therefore, we can see this big shift in policy because of the financial crisis. And then that applies to many, in general, all the countries in the region. They had to use an expansionary monetary policy. Well, the last point, right, is I wanted to emphasize on that one because we are seeing that there has been some assistance to financial institutions by Latin American governments, right? But the approach is different because this assistance is not of the same magnitude that we're seeing in the United States, right? Again, and the reason why is that Latin American banking system did not have these toxic assets. They were not exposed to them, right? So, but we are seeing some decrease on credit there too as well, and that's why the governments have responded to this. And for example, we see how the Development Bank of Brazil started purchasing some shares from banks who were in trouble. Then, for example, also the Development Bank of Mexico, NAFINSA, start giving some credits to small and medium enterprises. So we have seen some response, right? But again, the magnitude on the assistance to the banking sector is totally different, right? Because the crisis didn't originate here. Okay, so I want to talk about some interesting cases because I think they have something for us to be focusing on when we talk about the lessons and the challenges. And I want to start with Brazil. So with Brazil, right, most of you might be aware that Brazil is a leader in the region. They have been affected by the crisis, but they are expected to recover very quickly, faster than any other country in the region. They're expected to grow in the next couple of years. Yeah, I was going to talk about economists. You can just show it to everyone. The economists just have in the magazine, yeah, that came like 2 weeks ago, 3 weeks ago, right? And talks about the success of Brazil, right? One of the reasons why Brazil has been very successful is that it has a very diversified export sector, and it is diversified in terms of products, and then it's also diversified in terms of regions, right? So therefore, it is a very diversified economy. Then another good thing about Brazil is that it has been able to achieve macroeconomic stability. So Brazil also faced some trouble, right, during the 1980s and 1990s, and was able to implement some reforms that allow for, first, the control of inflation, and then second, another important one is to become more fiscally responsible. Actually, we see that in the case of Brazil, they passed in 2009 the fiscal responsibility law. And with this fiscal responsibility law, governments are forced to make sure that they don't overspend the money, right, and that they are going to spend the money wisely. And the way that they do it is that they set a fiscal target for government expenditure, government revenues, and public debt. So they set this fiscal target, and they need to stick to it. Then for Mexico, here I have Mexico has got a bronchitis. So I have these because I don't know if many of you have heard before, but there was this saying that when the US sneezes, Mexico catches a cold. Well, if we look at the current situation, it's more like Mexico caught a bronchitis, right? So, and why is that? Well, we see one of the reasons why is that, yes, the Mexican economy is very dependent on the exports to the United States, right? And there is a big recession in the United States is affecting their exports. But then there are other factors that are coming to play, right? Like the problem with the drug cartels. Then also in May, when we had the H1N1 flu, we see that had a negative impact on the economy. So there are other things at play, right? But, right, the recession in the United States is definitely, I think, the major player, the major reason why Mexico has got this bronchitis. Well, but Mexico is also an interesting case, and I want to look more into the bright side and optimistic side, because Mexico has been able to face the crisis in a different position than it would have been before. Mexico had the peso crisis in 1994. With this crisis, Mexico was able to implement reforms that allow for more fiscal responsibility, and then also that allow for a good central bank. So therefore, we see that Mexico, it is argued that it has been in trouble, right? Because we see GDP dropping significantly, but they have been able to use a fiscal stimulus, and they are facing the crisis in a way better shape than they could, the best they could. In some sense, we can see it that way. So, in some sense, Mexico has learned the lesson in the 1990s, and now it is better prepared to face the crisis, right? One of the reasons also is that Mexico has actually a relatively healthy banking system that was not exposed to these toxic assets, and then also we see large reserves of foreign currency, which also puts Mexico in a better position.